This class is concerned with business ethics. In it we'll look at the overview of the responsibility of the stakeholders, the various stakeholders associated with a business. So, to start, ethics is a set of values and rules which define the right and wrong conduct. It's a set of values and rules, primarily, and rules which define right and wrong conduct. Ethics means norms, normal ways of behaving, accepted ways of behaving, morals, and ideals prevailing in a society. So the ethics of the society, the moral code of the society is, or may be portrayed through the norms. What is the standard way of acting and behaving towards each other in that society? So ethics is associated with words like the norms, the morals, the ideals in a given society. Now the principles of ethics, well, ethics deals with issues like honesty, respect, responsibility, fairness and care. And there are 6 sources of ethics we can identify. There's genetic inheritance. Now that may be somewhat controversial. Are we born with a certain moral code? If our parents and grandparents, etc., were good people, does that make us good people? That's debatable, and I think many examples to the contrary could be found. Religion may be a source of ethics, but again, that is controversial as to whether people use the religion as a guideline or sometimes even as an excuse for their behaviour. Philosophical systems, well, ways of thinking, certain attitudes and ways of thinking which are based on particular schools of thought. Codes of conduct, what is acceptable, what's not acceptable in society, or what's acceptable and not acceptable in business. It's the code of conduct. And sometimes the code of conduct doesn't have to be written down. It's an understood code of conduct. This is the way it's done. It's always been done that way because it's a good way to behave, or it's a good way to do things. The legal system, well, the legal system should ideally reflect the ethical stance of the society. It shouldn't be contradicting the ethical stance of the society. If it did contradict it, then there is a position of conflict between the two. Then there would be turmoil in the system. Simply, the people would not respect the legal system. So the legal system must reflect the code of conduct and the religious views, and so it must adopt it. Although in wider political senses it's believed that the legal system should be above all of this. It should not reflect a particular religious view, for example. That if somebody who dissented from religion went in front of the courts, they should be treated fairly. The codes of conduct may be not seen as good as well in some respects, in some areas. So simply because there was a code of conduct doesn't make it right. So the legal system has got this balancing act to do, and it relies for its legitimacy on the political system. The cultural experiences of the society also determine its ethical base. The way the culture has developed, the way the society has developed, its history. So we have various possible sources for ethics. As I said, some of them are a little controversial and certainly debatable, but we would look to those 6 as somehow perhaps forming the basis of the ethical stance of the society, or of the ethical stance of the business, but subject to scrutiny and debate. Business ethics, well, business ethics is just ethics plus business. The business is commonly referred to a commercial activity aimed at the profit motive. Now, that's what we understand by business. Business is normally a commercial activity and it's aimed to make profit. That's what we understand. Business ethics refers to moral principles and rules of conduct which are applied to the business. So the business, for example, takes good care of its workers, even though that means increasing costs. It makes a product which is safe for the consumer, for the buyer, even though that means extra cost as well. But the business does not want to harm its workforce or its customers or the community. So ethics overlaps with business. And business ethics means conducting all aspects of business and dealing with all stakeholders in an ethical manner. So all the stakeholders, the workers, the customers, the community, the suppliers, the banks, the investors, the managers, all of them should be dealt with fairly, openly, honestly, and with due regard for their safety and for their feelings and their involvement with the business. Some unethical practices could relate to, for example, customers, perhaps selling a good which is not fit for purpose or which is dangerous. So the government may devise laws which are discriminatory towards certain parts of the business community or towards certain business practices, and unfairly so, perhaps stopping a business from running within a certain area because it believes that the area needs to be protected, when in fact, let's say the area does not need to be protected in that sense. The area was perhaps previously an industrial site and it's been turned over for that purpose again. So the government may pass laws that affect business, affect the stakeholders in the business in quite a discriminatory fashion. Could do. It's not good government and it's not good law, and it does not apply in all countries, but it is a possible outcome. The community. Well, the community could be affected by unethical practices. If the community was attempting to develop itself in terms of the infrastructure and the way it was living, and a business was seen as not fitting with the community, that community ideal or spirit, that business could be affected by the community. It could be affected adversely by the community. Perhaps the people working in the business may be seen as not communally minded. And there are certain industries, perhaps in the defence sector, in ethical pharmaceuticals, in many aspects of that type of product, where the community may hold suspicions about the business and may believe that the business is being unethical. The employees must be protected, and businesses may, if they're trying to economize, to save on costs, they may risk certain practices. But likewise, the employees may also not be fair to the business and not put in adequate effort for the rewards they're receiving. That's a possibility. The economy, well, generally speaking, we are quite passive when it comes to the economy. We are part of the economy, but there's very little that I can do about the economy, or a single business can do about the economy. But making a contribution, making a fair contribution is something that businesses should do. So for example, reporting its tax honestly. Its tax liability should be paid openly and honestly. It should not engage in practices which do not fit with the legal system and the requirements of law. It should not involve itself in trading, which is a form of cheating, perhaps insider trading. So there is a two-way relationship, as indeed with most of these. There is a two-way relationship between the customers and the business. The business looks after the customer, and the customer should be decent and honest about the product as well. So there are all sorts of issues when we deal with unethical practices. Unethical behaviour could happen for many reasons. I mean, lapses in individual ethics. People sometimes go off the rails. Just it happens. The ruthless pursuit of self-interest. Sometimes people want to be rich and don't care about everybody else. Just want to do whatever they're doing and get rich. And it could be outside pressure. It could be that people or businesses feel that they have to act in a certain way because there is pressure external to them, in a sense forcing them to do or to behave in that way. It could be circumstances, or it could be direct pressure from people or organisations. Corporate governance, well, the structure varies from country to country. It tends to be standardised on the American patterns, generally speaking. And globalised capitalism tends to have a greater degree of self-governance because it runs across several countries, and it's difficult for one country to have a set of rules that applies right across the organisation if the organisation happens to be positioned in many countries. So it is for the business to self-regulate almost. And so corporate governance is sort of substituting government regulation of the market. It's substituting that for self-regulation of the market, of the activities of the business and of the market in which it operates. So what we've got is an emerging onus on the business to regulate itself in an ethical fashion. And whilst most big businesses try to do that, I think openly and honestly, and also use it to explain to the world how good they are, but some businesses may find that it's easier to make profits and run. And making profits and run does not fit necessarily with the ethical stance. Corporate governance, it asks that the managers effectively execute the strategy laid down by the board of directors, the BODs. Avoid fraud, deception, malpractice within the corporation, and provide opportunities to shareholders to examine the functioning and true performance of the corporation. So the accounts should be open and honest. There should be no attempt at deceit or malpractice or false accounting. And the manager should try to implement the policies of the board of directors. And the board of directors in turn should base their policies on some ethical positions. The principles of corporate governance, well, fairness, that the workers should be treated fairly, and customers should be treated fairly as well. the customers who buy in good faith should receive the product and pay for the product, and it should be done openly. So there is fairness, and fairness is seen to be done. Accountability, that the accounts are done properly and openly, and that when there is a mishap or some misalignment of intention with consequence or outcome, then there is accountability, that you can trace back in the organisation to where that problem arose and fix it. And so it not just runs through all of the various departments, marketing, accountancy, finance, distribution, but it runs as a part of the whole organisation. It permits the whole organisation that if there is an issue, it can be traced down to one part and can be fixed at that part. So there is accountability. Each part owns up to what it's done. And if it's not good, they still own up and it gets fixed. Likewise, in the example I just mentioned at the outset, in the accountancy department, the accounts should be open and honest. Now, accountability should also be within the accounting department, that the final sets of figures and the final observed practices of the business should be ethical, should be fair, decent and honest. And the company should take responsibility for its outcome and for its actions. Not try to avoid it or try to be clever and outmaneuver the people who are affected adversely by some aspect of the business. It should take responsibility for what it's done. And there should be transparency. It should be clear to everyone what happened. There should be no attempt at covering up something which has gone wrong. It should be open and transparent. The organisational stakeholders, well, corporate stakeholders, a corporate stakeholder is a party who affects or can be affected by the company's decision. So the idea of a stakeholder is very wide. It means anybody who affects or can be affected by the company's actions. That could be the community. It doesn't have to be people working in the business. To be effective, an organisation must at least minimally satisfy the interest of all the groups and have a stake in the organisation. So they should have some sort of stake in the organisation, but as I said, a community can be a stakeholder. There may be an interdependence between the community and the business, and in that sense there is a stakeholder relationship. And there is an interest. So that's what we mean by the stakeholders. And if you look at possible stakeholders, it's very wide. I've put a list of them on the screen, and I suggest you stop the video from time to time and make your own notes and do your own researches and pad out the notes. But for the moment, there's a possible list of stakeholders. And we can divide up the stakeholders to internal and external. And I think that diagram is also fairly self-explanatory, so I won't waste time on it. But again, stop the video, make your own notes, and you can see what you mean by internal and external. The responsibilities and characteristics of stakeholders. Well, owners and stakeholders. The number of owners and roles they carry out differ according to the size of the firm. Well, clearly a small business will have fewer owners, whereas a large PLC, public limited company, will have many owners. All the ordinary shareholders are the owners. In small businesses, there may be only one owner, the sole trader, or perhaps a small number of partners, as in a partnership. In large firms, there are often thousands of shareholders. who each own a small part of the business. The ordinary shareholders, in other words. Well, the managers organise, they make decisions, plan, control, and they are accountable to the owners. So that's what the managers do. That's the function of managers. The employees, well, the employees, a business needs staff or employees to carry out its activities. The employees agree to work a certain number of hours in return for a wage or salary. So there is a contract that they will work a certain number of hours in return for a certain sum of money. Pay levels vary with skills, qualifications, age, location, type of work and industry and other factors. I'm sure different industries will throw up different factors. But for the moment, those seem to be the big and popular ones. Skills, qualifications, age, location, type of work and industry. So the employees have that sort of relationship. The customers buy the goods or services produced by the firms. Now, these may be individuals or other businesses. So a customer could be a business or an individual. Firms must understand and meet the needs of their customers. Otherwise they will fail to make a profit or indeed survive. The whole idea of being in business is to satisfy customer needs. So if the business is not satisfying the customer needs, then of course the business will cease to exist. Customers will turn against the business, not buy its output, and the business will fail. Suppliers. Well, firms get resources they need to produce goods and services from suppliers. It's very seldom that a company is completely self-sufficient. Generally speaking, they have to buy raw materials or they have to buy in components or whatever. So they rely on suppliers. Businesses have effective relationships with their suppliers in order to get quality resources at reasonable prices. So there is a relationship between the suppliers and the business. There must be a good relationship, in fact, and hopefully for the business they will negotiate discounts and get quality output to enable them to go on to make a quality output which will be ultimately sold to the customer. It's a two-way process. The supplier depends on the firms they supply and the firms depend on the suppliers. It's a two-way thing. The community. Well, firms and the communities they exist in are also in a two-way relationship. The local community may often provide many of the firm's staff and customers. So the community must be respected. The business often supplies goods and services vital to the local community. So the business is putting something into the community and the community is putting something into the business. So there is a relationship between the two. If the output of the business is not sold within the local community, if it's sold internationally, for example, the business is still creating employment within the area. So there still is a business interest. The community has a business interest. So in the case of the business supplying, say, its goods internationally, it's supplying jobs locally. So the community benefit from the jobs. The government. Economic policies affect firms' costs, taxation and interest rates. Legislation regulates what businesses can do in areas such as the environment and occupational safety and health. And successful firms are good for governments as they create wealth and employment. So there are relationships between the government and the business. The government affects the business through macroeconomic policy related to taxation and interest rates. That's a one-way relationship. The government affects the business in that context. The business does not affect the government to any great extent, although paying tax helps, of course. Legislation. The government passes legislation on all sorts of areas of employment, health, safety, and so on. And the successful businesses create wealth and employment. So there is a relationship between the two of them. Stakeholders' concerns. Well, the owners and the investors, for a start. Financial soundness. The stakeholders need to know the company is sound. Consistency in meeting shareholder expectations. For example, paying dividends and showing security of investment and growing the company. So having sustained profitability is an area of concern. And timely and accurate disclosure of financial information. There should be an openness between the stakeholders so that each group knows honestly and fairly what is going on in the business. Ethics and stakeholder theory. Well, maximize stakeholder value, develop ethical, responsible behaviour of managers. Well, that's one task. The business should create an ethically responsible behaviour in the managers. So the managers should not work or behave in a way which adversely affects others, perhaps people outside of the business. And managerial decisions should reflect ethical responsibilities, distribution of benefit and allocations of costs in a manner that is considered right, just by the stakeholders. So, for example, the managers should not pollute the area or degrade the area, perhaps its natural beauty or whatever. It should minimize noise and all sorts of pollution. So managerial decision making must take into account the wider stakeholder community. And the stakeholder community includes the community itself, the suppliers, the workers. And in this context, I think probably those three are most appropriate to single out. So the management should act responsibly with those people in mind. Again, for the stakeholder group, for the customers, well, the product and service quality, innovativeness and availability, these are important areas of concern for the customer. They want new products, they want better products, and they want it available. And they don't want harmful products, ones which will hurt them or hurt their children. They want to believe that it was designed in a way which minimizes any bad side effects. And there's a good safety record for the product or service. They want to know that the company has a history of behaving properly. And the pricing policy is fair and open as well. There is no intention of cheating or sleight of hand in pricing. It's done openly. And there's honest, accurate and responsible advertising. They're not claiming things they don't do. For the employees, well, they want non-discriminatory, merit-based hiring and promotion. The hiring and promotion should be done on the basis of merit and desert, who deserves promotion who deserves employment in terms of their skills, their abilities, their keenness to do the job. So wages and salary levels should be equitable. People doing the same job should get the same wage or the same salary. If it's the same job and they are equal, then it should be non-discriminatory. There should be availability of training and development so that the workers can relate to the business and can promote themselves and their interest in the business. And the workplace should be safe, and there should be privacy in the work position. That information about the workers should not be disclosed. So it should only be disclosed to the worker. In other words, the employer should treat the workers with respect and should deal with the workers openly, honestly and fairly. For the society, well, there is this idea of community involvement. The business may want to have community involvement, get feedback from the community about its work or about its involvement in the community due to its location perhaps. There may be a percentage of profits designated for cash contributions to local causes or local initiatives, so that the business is seen as an integral part of the community. There should be innovation and creativity in social welfare, in, as I said, the involvement with the society. And the products themselves could have donations or should perhaps be involved with schemes associated with the community, perhaps charitable work or good work within the community. It should make available facilities and or other assets for community use, for example playing grounds or gymnasia or swimming pool or whatever they've got. Perhaps that could be opened up for use amongst the community. And there could also be employee volunteer efforts where the employees are organised to help out with some aspects of society and get something done, perhaps clean up litter or help elderly members of the community or whatever. There are also environmental issues. The product should be packaged in a way which is sensitive to environmental needs, not wasting packaging, and the product design should also minimize its carbon footprint. It should minimize its effect on the climate, on the community as well, because if it is disposed of and it doesn't degrade, then it is long-term litter. So there should be some recognition of this. There should be some recycling efforts and the use of recyclable paper or materials. So pollution should be prevented. And there should be global application of environmental standards. The companies should follow good practice elsewhere. Now, this class has covered a lot of ideas about stakeholders and about ethical issues. It really goes across the relationship between the business, the employee, the stakeholders, broadly defined, and looks at some of the issues involved in meeting the expectations of the stakeholders, even though meeting those may have cost implications for the business. It's fair to say that our perception of business has changed radically over the last probably 30 years, and now is much more recognition on the part of the business community of their role within the wider society and their obligations to that society. And it's seldom we meet a totally self-centered business whose entire focus is on profits. More and more businesses are recognizing the need to be ethical and to be responsible within the community. It's a long video. I expect you to stop it many times and make your own notes and do some research based on some of the issues that were thrown up here, and raise them again in seminars and in discussions if appropriate. So in the meantime, that concludes this talk. So thank you for watching.